I think if you could sit down with some of these money powers one-on-one in a closed room or in a restaurant or whatever and get their truth from them, they're probably scared to death. That's my take. Am I right? What I am right about is how fragile the system is, and something's got to give.
This Cyber Week's specials with Miles Franklin Precious Metal Investments. Silver Philharmonics for only $360 over spot. Backdated Silver Eagles for only $850 over spot. And 100-ounce Royal Canadian Mint silver bars for only $265 over spot per ounce. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. This is Elijah Johnson with Liberty in Finance. And back with us today is our good friend David Morgan, the silver guru from the Morgan Report. David, thank you so much for joining us today.
Thank you, Elijah. It's always good to be with you.
Now, the first topic I'd like to discuss is I know the last time we had you on, you were making a pretty bold prediction that by the end of the year, we would see a notable shift out of stocks and into metals. And we'd see really a cooling off of the stock market and not necessarily a crash, but it would be noticeable pullback. And that's definitely what we've seen. So your perspective on kind of what's been causing this pullback in the stock market and where we are headed from here.
Well, the real answer is people that follow my work closely know it's because there's either buying pressure or selling pressure. Obviously, there's selling pressure, and that's why the market's going down. And then you have to ask why and who. The who is pretty easy. It's really the big giant whales that hold the big stock positions that have been distributing their stock over time to not disrupt the market. I mean, if you have a market cap of make up a small number, 200 million, and then someone holds 100 million worth of stock, and they sell it all at once, you're going to drive that price down to the ground. But if you filter it out at 10 million shares, 5 million shares, 3 million shares over time, you can filter it out into other hands and not disrupt the market. So that's what's been taking place. And so a lot of the smart money is already out of the market. On top of that, there's so much uncertainty of what's going on with the Fed, and Powell talking briefly about tightening and sounding like he means it. Of course, the Fed's really locked into a position of no return. There's no way these debt can be paid off. Everybody knows it. Everybody pretends there's something magical that will take place. It's not really relevant, but the markets at this time act as if it is. And then on the metals, I would have to admit that I'm half right and half wrong. The year isn't over. Obviously, the stock market is cooling off, as you mentioned, but so have the metals. And it's a little discouraging because the last time we talked, around early November or something, we got a nice lift in silver from 23.5 up to almost 25.50, and it wasn't really overbought that much on the commitment of traders report. And it was kind of languishing around the $25 level for some time. And then we hit options expiration and got careened. And, I'm fairly, I would say, famous for saying, but I've been consistently saying for years that you can, set your watch on options expiration. Options expiration is when the market gets pushed down or miraculously falls in price or whatever. It's all due to delta hedging, and I won't go into it. It's a little bit complicated for most people that aren't sophisticated investors, but it's the algorithms that set the tone and continue to sell and force a selling pressure on it. And when you have unlimited funds and you can just sell, that selling pressure will dominate the market. It'll make the price go lower, and everybody that's on that side, which is the professionals, will sop up the profits from the public that's notoriously goes long. Moving on, I didn't expect the market after options expiration to continue down to the level that it is. In silver, we were at about 22.5 early October, and here as we're doing your interview, we're at 22.5. So we've done what's called a round trip. We've gone from 22.5 to 25.5 to 22.5, and it's really, really starting to grind on people. I do think that we will probably see a low print at the end of the year. This is not unusual. I'm very gray haired and I've been in this market a long time. And usually going back into my, 1970s, 1980s, 1990s, early 2000s, 2005, 6, 7, December usually started up for the metals. But the most recent time, the lowest tick on the gold and silver markets have been on the last trading day of the year. You can go back and check me on that. I just have it from memory. I know it's true. Is it every single year? No, but almost. And so I think we're in that situation. Again, Elijah, I don't like it, but that's probably where we're heading. So the good news on that is it's almost like it's huge, like 90% probability that from that low going into January will be quite high or quite a move up. So I'm not a big options trader. I used to do a lot. I wouldn't recommend it. I'm just saying that if you wanted to do leverage timing-wise or seasonality-wise, that might be one to look at. Go ahead and verify it. I'm not giving you financial advice. I'm educating you on market cycles and my 40 plus years of experience in the markets totally, but primarily focusing on the commodities and particularly the precious metals.
Now, you mentioned how options expiration is probably the cause of this recent sell-off. It seems so strange because it seems very artificial, not really supply and demand dynamics pushing the price.
Exactly. I hope I didn't interrupt, Elijah. But no, I talk to a lot of the bigger people that are real in the industry. What does real mean? It means the mints. It means the wholesalers. It means the refiners. And who's making a market in the physical market. No, there's no one selling anything. So in other words, it's all paper. There's no one that's coming and saying, hey, I hate this gold. It's, it's really nice and low now. I want to off it. I'm going to sell, 8 tons to you. What's your offer? It's not happening. I mean, are there some sales? Yes. I mean, they're absolutely minuscule. In other words, the market's not reflecting whatsoever at all what the physical reality is.
That's definitely what we're seeing at Miles Franklin is, pretty much only buying. So it's really interesting how, we're only seeing the buying. And even as the price drops, that's when the most demand for us, most people call. It's like the phones are ringing off the hook when we see the price of gold and silver fall, which seems so counterintuitive because it seems like, well, wouldn't everyone be selling at that moment because the price is dropping? But I mean, I guess it's a good buying opportunity. Your perspective on that, though, like holding the physical versus you mentioned that there might be some opportunity to kind of play some leverage starting next year.
Yeah, sure. I'll be happy to expand on that. First of all, let me just remain consistent. Most people have no business whatsoever doing anything in a leveraged market, be it options or options on futures or any of those highly leveraged derivatives. I've always advocated that for most people, cash only, buy and hold, and there's leverage programs in the physical market. I mean, you could pledge silver, you could take a loan on it. And, I'm free market if that's what you want to do or need to do. I mean, some people have got a pretty good, base of metal and then they hit a rough spot and they don't want to sell it. So they take a loan on it. I'm not really against that. I think that's a service that needs to be provided and it does exist. There are many outfits that do that. But what I'm talking about is buying 1,000 ounces of silver, putting it up as collateral, and then leveraging it 3 to 1, 4 to 1, 5 to 1. Those are actually worse deals than going straight into the futures markets. But I digress. So once you have a physical metals position, I think the best way to gain leverage and have safety at the same time is through the equity markets, which is what, the Morgan Report specializes in. But if you want to take a flyer and seasonality and worth the risk and what the risk-reward ratio looks like, the seasonality is very favorable going into January, any year. And I think this year especially with the fact that the stock market is showing some weakness and gold is the most negatively correlated asset to the stock market. And having said that, people that are listening to this that are maybe more novice investors, oh, David, you're wrong or whatever, and that's fine to have that thought, be a free thinker. But we're talking, it isn't an absolute day by day, tick by tick. So if you do an overlay, let's say a year from now, and let's say I'm correct, and the market continues down and the gold continues up starting, let's say, from this point forward, or not, you would probably see the divergence I'm talking about. And from a longer term perspective, where you're at that 30,000 foot viewpoint, holy moly, look at that. Gold's negatively correlated to the stock market. But if you happen to be in there, in early December and you've taken a ride down in silver for the last month or less than a month, and you've gone from 25 and a half to 22 and a half, you're pretty upset. And I don't blame you. But from the perspective of what's really going on longer term, it remains to be seen. But the probabilities are pretty strong from what I just outlined.
Now, looking forward to next year, it looks like with regard to the markets, the Fed is, and the economy, the Fed is possibly going to turn a lot more hawkish, starting to taper more aggressively because of fears of inflation. Your perspective on the news we've been hearing out of the Fed recently?
Well, I think I mentioned it briefly already, but Powell is, kind of talking out of both sides of his mouth. Well, let me reframe that. He seems to be fairly dovish. So all of a sudden it gets pretty hawkish, and this has upset the markets. And the markets are making note of it. But as I said earlier, I don't care what they say, they're really boxed in. But the markets are reacting as if they have real power. Could they, really taper hard and, really cause some issues by not getting into the bond market and supplying as much buying power as the market wishes? Yes. Will they? Perhaps. But the game's really been over for a long time. And that's what people just do not want to recognize or admit or see happen. And I'm one of those. I don't want to see it happen, but it's going to happen, which means that these debt markets are going to readjust. And when they readjust, there's a lot of pain that's going to take place for the people that either made loans that don't get paid back, or people that see the repercussions of a market that cannot sustain itself as it adjusts.
I think one of the ironic things, I guess, is that we have seen low inflation, at least going by the official numbers, for so long, but we've been seeing the stock market rising aggressively. And now as we see inflation now take off, we're seeing the stock market seem to top out. Going forward, if we do see further selling, it seems like we have high inflation, but the stock market falling. So it almost doesn't make sense. It seems like the worst case scenario for investors.
It is. And in this kind of free-for-all fiat fiesta that the money machine just continues going forward. In unadvanced economies like Zimbabwe, the more printing that takes place, the higher the stock market, because it's one of the few-ish places where you can park money in that environment or that jurisdiction and have some hope of not losing everything that you have. In an advanced capital structure like we have in the United States being reserve currency, there's this stopgap, you might call, or this wall or this foundation called the bond market. So the debt markets are about triple the size of the equity market. So once you have a problem in the debt markets, it's the ruler, it's the king, it's the thing that matters the most. So if you have uncertainty in the sovereign debt of the fiat system, of the reserve currency, now you've basically shaken the whole planet, because everyone that has any sense about what's really going on, which by the way is very many, but the truth works regardless of any acknowledgement of it at all. The truth will march on majestically, even if no one acknowledges it. So my point being that I think if you could sit down with some of these money powers one-on-one in a closed room or in a restaurant or whatever and get their truth from them, they're probably scared to death. That's my take. Am I right? I don't know. What I am right about is how fragile the system is, and something's got to give.
And what will that look like for the average person? And what are some ways that we can prepare for that system collapsing?
Well, for everybody betting on inflation or hyperinflation, I think you're mistaken. I think you'll see higher prices, but you won't see wage increases. So I think the best thing to be is debt-free and live a modest lifestyle. That would be my highest recommendation. My other one would be to continue to educate yourself and learn to keep a good attitude. I think being spiritually fit is going to be paramount going forward. Not from maybe the end of December 2021, but as we go forward. And first of all, I'd say it's always important, but I'd say more important than ever. So if you're not in the context of having good support and having a strong connection to your the spiritual fitness, I'll call it, you're probably going to be caught up in things of this world rather than things that are beyond it. And so, simplicity, make your life more basic. Again, live within your means, that type of thing. Now, oh, geez, David, that's easy for you to say. You're older, you got things paid off. You live a rather modest lifestyle relative to what I could live, etc. And I get it. I'm not trying to harp on anyone. You ask me a question, I'm giving you an answer. I think if you're in your age group, look at how you can help others and what skill sets are going to be needed going forward. And the most powerful, as I've said many times, is the truth. If we all speak the truth to each other and listen, really listen, I think that's important. Sometimes people that are really hurting probably have enough food and maybe their job is just adequate enough and they're not really in that bad a condition financially, but they feel like they are. And if someone really just is open-minded and open-hearted enough to just hear them out and maybe not even offer a solution, sometimes the best healing just takes place by being a one-way street where you just sit next to the person with an open heart and really care, really have compassion and empathy and just let them speak it out. Don't even offer any fix. I mean, being a man, I'm really good, especially as an engineer. I got to fix everything, right? Whatever problem you've got, Elijah, I've got a solution. You know what? Maybe there's no solution. Maybe the solution is just to be your friend and be there for you.
I think something else really on people's mind is also the pandemic, and we're seeing this new variant come out, and the pandemic has already affected people. Well, I guess the response to the pandemic, I should say, has affected people financially, obviously, and there's the possibility that this new variant, regardless of how actually harmful it is, right? The public response and the government response to this could impact the financial system significantly. So your perspective on that and what people should be watching out for.
That's a tough one. Again, I'll just kind of repeat what I just said. I mean, what's the truth of it? I don't know. I'm not, medically trained. I have my suspicions about this whole situation. There's a lot of fear that's put out through the mainstream press. And then, of course, a lot of the public that isn't cognitively sufficient enough to question authority and have the skill set to look and think through everything, get locked into fear. And once fear takes hold, it's hard to unleash it. It's just something that becomes part of their nature. And this has been the case since this thing's been going on for so long. So once you have that fear base as a foundation for, let's say, half the population, and then you say, hey, there's another boogie-woogie man out there, and it's called this, and you give it a new name, and it's going to be this and that. Whether or not that's the truth or not doesn't matter from the aspect of you have more control because you've instilled more fear. And that's really, really sad. Is it real? Is it what? I don't know. What I do know is that it is not being spoken about in the correct way. What's really the agenda? And I'll tell you what I think, and I hope your video doesn't get taken down, but I think it's partially, not fully, a cover for what's going on behind the scenes, which is this power grab for a more or less democratic system and a financial system. And there's the great reset that the power brokers and money masters want to take place. And by instilling fear through this idea that puts most people at their mercy. And then any pushback from others is ridiculed, ostracized, sidelined, and you're penalized for it, because the ability to do what we've always done, which is have the right to petition, it's even in the Constitution for United States, Americans, is being pushed back by the power elite. So we're in trying times. Doesn't exempt you from doing the right thing. I mean, the founding fathers, and you get blowback for that because they were white. I don't care what race they were. They weren't all white, by the way. But regardless, they were ready to give up their fortunes and their sacred honor. In other words, everything, because to them, freedom meant everything. And you know what? As far as I'm concerned, they're right.
All right. Well, David Morgan, we really appreciate your time today and all of the wisdom that you've shared with us. Before we let you go, did you want to share with the viewers where they can find you and any last thoughts you had?
Yeah, you can find me at themorganreport.com, and I will take another couple minutes. I am upping the price. Inflation even affects us, and it's not all about me. I have a staff. I have to pay everybody. So we are going to go from $50 a month to $100 a month. But the deal is, and I've done this in the past, you're going to have 1 month from now, early December, all through December, to buy it at the $50 a month, or even save 20% if you pay for a year. And you will stay at that price forever as long as you renew, which most people do. So there's a month's opportunity there to buy it at really a half the price it will be available for starting January 1st, 2022.
All right, David, once again, thank you so much for your time, and God bless.
God bless you.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded. For physical delivery, vault storage, or precious metals IRAs, excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.